Hello traders, this is the second part of the video series on examples of candlestick patterns in action. And for the purpose of this demonstration, we will look at the dollar yen chart on the daily time frame. This is the most recent period. Here, this candle is the Brexit candle, 24th of June. So let's start from right from that candle, as it was support from the right at the bottom of this candle. The market then traded sideways for a while, came back again down, and then we get this bullish engulfing candlestick pattern at support from here. So that is a buy signal by definition, let's say. Uh, so valid buy signal with a target, looking from the chart. Without any additional indicators, this seems like a good target, and as you can see, the market reached it. Why is this a good target? Well, have a high here, therefore it's resistance. Plus, this resistance is strengthened by those lows here, which are very near to this level. So this was the resistance actually that was the target. So this whole some 50-70 pips area is a resistance area from those two support levels, which here turn into resistance because they are broken. And as you can see right here, the market fell as they acted as resistance. So there is a probability that they will act again in the future, and that's exactly what happened. So this would have been a very nice trade. Exit somewhere in this level, entered here, stop here or here. So that was a 400 pips stop with a target of yeah, also 400 pips, but let's say the trader made 360, 380 pips. Some of you may not like this trade, a one-to-one risk reward ratio, and that's perfectly fine. If you don't like to take trades like that, you don't have to. But for those of you that do want to take on such trades, this would have been a perfectly fine trade. So now we have another trade here right away. What do we get? A bearish engulfing candlestick pattern right at resistance. This is even now stronger resistance. Clear sell signal, clear target down there. Excellent risk reward. 170 pips risk for the stop loss. 500, almost 600 pips for the target. So perfectly valid trade. So even let's say if we go like this, so let's say the trader enters here, goes to the right, market is falling, and let's say on this daily candle the trader got scared a bit during the day, but look at the close. This is almost like an inverted hammer. So at the beginning of a trend, an inverted hammer in a downtrend actually means that there is a higher probability that the market will break lower and continue the trend. And that's exactly what happened. As you can see in the next two candles, big drop to the downside, big drop to the downside. And at this point, it's close to the target, it's close to this support area. So some kind of a bottoming process is starting. So you may want to close out your position here, but don't have to. No reversal signal yet, but because it's close to the target, absolutely take some part of the position, uh, some close out some part of the position, take some profits. We are progressing to the right, and the market, yes, reached it finally. Although here we even got a bullish engulfing candle that's very, very close to support. However, the market still broke below it and again reached this support area precisely, because this was not a precisely reaching it. It was almost reaching it, but not quite. Here, it even broke lower, and again, of course, I mean, after that, it reverses from here. So as you can see, yeah, so we can see it better. So this is a small bullish engulfing candlestick pattern. Excellent risk reward, 60 pips, stop loss with a nice target to up to here. Of course, it didn't reach it, but it would have been a valid target at this point in time. So let's say if we were long here, of course, this is the exit signal on this dark cloud cover. If you take a look closely, this candle doesn't close all the way into the green one, so it's not a bearish engulfing candlestick pattern, but it's only a dark cloud cover, which is also a very strong indication of a reversal. However, not as strong as the bearish engulfing, of course. And the market fell after that, traded range bound for some time, fell again, and here we get another bottom. And what's interesting, when it comes back up, so here is how a candlestick pattern may not work. And we are gonna see how you could have judged that it would fail. Very good example for that is this point of the chart. So this is a resistance zone. The market is rising, and a bearish engulfing forms. Clear sell signal. By all means, sell here. Stop loss here. 150 pips, target 270, 280, maybe even 300 pips. So perfectly valid trade, 2 to 1 risk reward. So what's happening after that? Let's see. Market going up again. Another reversal signal, candlestick reversal in this dark cloud cover pattern. Another green candle, another dark cloud cover. However, if you take a look, let's take the trend line tool, you can see that there is a support trend line like this. And the market breaks it lower. However, again, a green candle here. Market is pressuring this resistance zone, so it cannot break lower. However, let's say that we are still patient. Resistance is holding, and here this is another actually reversal signal. So let's just zoom here a bit. So that's almost an inverted hammer at resistance. Strong indication again of a reversal. However, it does not happen. So as you can see, another trend line like this could be drawn here. And actually, the signal that this reversal, these actually reversal patterns will fail is in this support trend line. As you can see, it holds instead of the resistance, so the market breaks higher instead of lower. So this was a perfectly valid signal, although not as much of a hammer because it has a small lower shadow, but judging by the upper shadow, long upper shadow, it's a valid signal to enter short. However, candlesticks are not perfect and they fail too, so this is a perfect example for that. And the absolute revelation came on this candle here, and it was clear that this reversal will not work on this strong close above the resistance zone. And again, the market is playing with us. it reverses immediately after that. So this could have been some kind of stop hunting, maybe. Who knows? Closes above resistance and then moves back below resistance again. So at this point, the target is again down here at 100. Doesn't mean the market will reach it. However, that's what the charts are telling us right now. So yeah, that was an example of dollar yen since the Brexit vote on how to use candlesticks and how they work and sometimes fail in the forex market. So thanks for watching, guys, and I'll talk to you in the next video on candlesticks.